Friends, power play is a big theme in next few years. Renewable sector it's a big mega trend, and today we are going to talk about how you can play this power play by investing in the companies like PFC or REC. Whether it is worth investing, first of all, we'll talk about that. And if you invest, how is the output look like from here? Many questions I have received for PFC and REC. We'll talk in detail, but first of all, let us talk about the power play from here. Now, how this sector can be a big over the time. And guys, before I go, guys, if you're still not subscribed to our channel, do subscribe and do like this video, guys. And if you have any question, put it in the comment box. I do answer each and every question. So let us talk about the power play first. Power play is nothing but a 42 lakh crore rupees of no, you can say that no, it's a sector. And next few years, guys, this sector can be a big one. This 42 lakh crore I am talking about, that is 42 trillion crore, is nothing but a sector where lot of things will be required. Like suppose there is lot many power areas, and power equipments need to be changed. So replacement, one is the new capacity. That is a second thing. New capacity is going to come as the economy is going to develop from third largest economy to fifth largest economy. You have to increase the capacity, so that too. And the third part is more and more renewable no basically equipments required. Okay, and again no installation for renewable energy and all that. For that also you need the financing. So all these things you have to keep in mind when we are talking about our financiers, because renewable energy now from the thermal you can go saying that okay, it will go to renewable energy. So this transition phase needs lot of capital, and that is where this power finance corporation and REC can play a big role. As I told you, it's a 42 lakh crore rupees market. And again, also guys, if you see the power consumption is growing by 7% year on year basis. In future it may go up also. Okay, even the if you talk about renewable sector in last few years, the total no can installation was around 86 gigawatt. In next 3 to 5 years, the government is saying that their target is to almost having a 250 gigawatt capacity. Now you can think about it, such a big expansion is going to have almost 3 times in next 5 years. And this is why if you need to install so much of capacity, you need funding. Okay, and this is where these two companies who are there under the of course they are PSU companies under government, can play a big role. So keep this in mind when we are talking about PFC and REC, guys. A scope is big. Now let us understand more about the detail. Of course, this PFC and REC is always been helped to finance the power sector and thermal power, and lot many capacity expansion, distribution and all that. In future, not only this, they are going to cover lot many area like electric vehicle. Okay, then you can say that of course thermal and all that is there. Then 1 minute, guys. So of course they are going to ethanol blending. Okay, vehicle and charging infrastructure, biorefinery projects, solar panels, fuel gas distribution. So all these things they are going to finance. So they are increasing the scope. At the end of the day, they are increasing their scope, and that is when it will be much more useful for all these power finance company to expand their not only scope but also lending to many other sectors. So diversification will be there. And again, they have worked a lot on their NPS. Now NPS is currently about the lowest from last so many years. Of course we are going to talk about the each and every data also, but this one you have to keep in mind, guys. Again, guys, the basically if you see ROA, all the thing is improving. The main thing why they are improving, because their NPS is going down. See what happened the earlier, they used to do all this financing. Okay, now whatever, if some asset is dead, no one was speaking up. Now what is happening, because such a big mega trend is there, many of the private companies are taking away the old power stations and all that. Okay, so usme kya ho raha hai, they are able to recover that money. Correct. So restructuring of asset is happening, and because this restructuring of asset is happening, all these power finance companies are in a much more in a sweet spot, and that is where their NPA is going quite down. Okay. Again, when we talk about the no for the capex also, because they are having a, we'll have a good capex in future. There are very few entities they can provide this type of finance. Again, the financing what they provide, they directly get from the government help, so their financing rate is quite smaller and quite lower. And that's a major private company and public company who are doing all this installation and all that, they will come to PFC and REC only. And this is what you have to keep in mind, when we talk about this. They have an adventure, one type of moat only, which is helping them to grow. Correct. Now let us talk about some of the details of PFC and REC. First we'll talk about PFC, how the stock has performed over the years. And if you talk about last few years, the loan growth is almost around 13 to 14%, and in future also it will be around 15%. It may happen for next 2 to 3 years. Again, when we talk about disbursement growth, last 2 years it was above 40%, but next few years it may be around 11 to 12%, based on the how the capacity, new capacity is coming. But the disbursement was very high in last 1 or 2 years. Again, ROE, if you see, ROE is almost around 11 12 no, few years back. Now it has gone to almost 17 to 18%, which will sustain for next few years. So that is a positive. ROE is very, very important to understand about this type of company who are a financing company. ROE is also around 2.83, which is quite good. This is extraordinary. If you have a ROA, anything about 2 is quite good. So they have 2.83, which is good. NPA, if I see NPA, NPA, it used to be 4 or 6 around financial year 19 and 20. Now it is reduced to net NPA. I'm talking about 0.7, 0.9. Okay, 0.9 is currently, and in the future it may go down also. And this is why, see, as I told you, distress asset and all that is being sold. Okay, and this is what is helping them. Okay, and keep this in mind also. 1 minute. So again, yeah, sorry guys. Again guys, understand the overall the valuation part and all. So some technical problem was there when we talk about the valuation and all that, price to book value and all that. No, earlier it used to be 2.2, 2.6 around price to book value. Now slowly and gradually it is going to 1.6, 1.4 something. No, and as the book value is going up, okay, we see, because at the end they are making profitability also, and that is why now the price to book value is little bit getting attractive. Even EPS growth, when we talk about, it's been almost 14 to 15%. In future also they may clock an EPS of 50% growth. So that is a good thing. They are going to have a profitable, of course, around 15%, not like 25 30%. But यार क्या होता है इन सब में, इनका P ratio क्या है? What is the P ratio of PFC? Is around 6 to 7 only. So in future, if the company is giving a good profitability, of course the P ratio is going to go up. Okay, so this is what you have to keep in mind overall when we talk about the company and why they are getting a lower P ratio, because the government company, PSU company, और वही दिमाग में होता है ना, because it's a PSU, it may not give you great return. So PFC, in a way, this is how the outlook would look good. Now let us talk about REC. Now REC, it's having a much better ratios compared to PFC. When we talk about REC, the year-on-year growth is around 17 to 19%, 1 or 2% more than PFC over the years. Year-on-year growth in disbursement is also better than PFC. Okay, ROE is around almost 22, around 22%, which may go around 23. I told you already, ROE of basically PFC is around 18 to 19%. ROE is already around 2.7, 2.8, which is also good, which is going to go up. When we talk about debt to equity, I forgot to tell you, PFC is around 5, 5.3 or 5.4. Why the debt and equity is high, debt to equity? Because at the end of the day, this is a financing company. And if you talk about REC, is around 6 and above, okay, which is almost near to what PFC is having. When we talk about the net NPA is already down than compared to REC, PFC around 0.8, 0.9, and in future also it is going to go down. Both, if you see, REC also few years back it was around, I think, 3.9 and 4 something. Now it is around 0.9. So which shows then what type of progress they have made, and how the distress assets and how the liquidity is flowing in the system. Correct. So when we talk about price to book value, is also slowly, gradually going down over the years from 2.9 to almost 1.2. Okay, P ratio, as I told you, it's around 6 to 7%. And future, the year-on-year growth, when we talk about the EPS, it will be a good one comparatively, compared to REC, maybe around 16 and 17% for REC. So when we compare these two company also, I think REC has a much better scope from here compared to PFC. But if both the companies are doing well, both the company has a good tailwind behind that, because at the end of the day, this renewable sector is going to boom. And as I told you, PFC REC, they are going to finance all this renewable sector also. Okay, and of course the scope is increasing now there, because their NPA is at a lower level. Things are much better now. You may say upon PFC REC gone up a lot, but since the scope is very big, so you have to keep in mind, nothing wrong in keeping in radar. Again guys, this is just a suggestion. You can do your own analysis before investing. But why I told you in nutshell about the detail about PFC and REC, that this is a good financing company. It may give you a better average, 14 15 to 20% return over the time. You can take a decision based on that. Again, I have not invested. If many of my client has invested, that's a different thing in our in our thoughtful investor, we have not covered this stock, just to give you a disclaimer. Take your own decision after doing analysis. So guys, hope you like this video. Do like it and share it with most of the people. And again, put it in the comment box if you have any question. And if you want to see our product, you can put it the link are given. You can go and check it out. We have just launched an ETF product, which are the good ETFs to buy, and that is also there. You can check it out. So thank you very much guys for joining, and I'll see you soon in the next video. Bye bye.